So we've been talking about PSD2 and open banking for quite a few years now. We've been coming to Fintech conferences and might have a lot of discussion about it. This year, though, is a little bit different. In 6 months from now, the regulatory deadlines will take effect, which will be put in place to make open banking a reality in the UK and across Europe as well. There's been a lot of hard work done over the last few months around technical specifications, regulatory technical standards to open up access to bank accounts, to enable payment initiators to move into the market. But it still feels like there's a lot of work to be done, a lot of work around liability, around governance arrangements, around how we can actually make all of this a reality in the future. So I don't know about you, there's still a lot of questions to be asked. So we have an expert panel here who will answer all the questions for you today. So we'll just get them first to introduce themselves, and perhaps they can say if I've oversold the panel as well. So first, go on.
Okay, hi everyone. I'm Yvonne Dunn, also from Pins and Masons, so that makes me a lawyer as well. I'm a technology lawyer who focuses on the financial services sector, and therefore fintech is a big part of what I do. I hope that Luke hasn't oversold me. I think I've certainly oversold my ability to remain on a stool while answering questions, so we'll see how that goes for the rest of the session. But looking forward to have the discussion and obviously talking to all of you as well.
Thanks, Yvonne. I'm Alan Lockhart. I work for Royal Bank at West, and I work in the team that's got responsibility for open banking and fintech relations. Our team has been working within the bank to push the bank in this direction for some time, so we're working on the very edge as the organisation moves to more open banking and API-enabled economy.
Hi, my name's Dave Toms. I'm the CTO for MoneyHub Enterprise, a fintech firm who applied to become an AISP, Account Information Service Provider. I'm also a member of FData, which is a trade body we have here in the UK for fintechs and people who want to aggregate financial information, and also part of the OpenID Foundation, where we're working, as kind of Luke was saying, on some of the technical standards for financial APIs.
Great, thanks. So Alan, maybe we'll start with you. So just to open up the discussion first of all, so what do you really see are the key opportunities for banks arising from this open banking regime at PSD2?
Okay, so the first and most obvious one is that we can use this ability to access customer data from any financial institution as a means to share that data with the bank itself and people are applying for accounts. So when credit decisioning, for example, is getting done, today we would expect the customer to come and to bring all that information, their outgoings and income and so on and so forth. Well, you wouldn't need to do that with this. We can just go ahead with that. So that's going to be one of the biggest ones. In addition to that, obviously account aggregation is something that the whole market has been pointing customers towards, and customers are demanding. So now you're going to see banks offering account aggregation, because that's going to be something that is essentially just required in terms of customer service. And then the final key point I would make on this one is that the ability to collaborate with fintechs, a lot of people make a lot of the competition aspect of it and disintermediation. We'll probably talk about some of those things later. But one of the huge opportunities that's right on the doorstep is bringing the strengths of fintech startup companies and getting them working with banks, the large financial institutions, which have always been very closed in their thinking. Closed, they'll do it themselves, thank you very much, don't need any help. Right? Now that's not going to happen overnight, because that requires a mindset change, it requires a cultural change, it requires an open outlook. But I think that change is inevitable, and we're seeing the first fruits of that, if you like, within Royal Bank and others.
Yeah, thanks. Maybe we'll come back to that point around collaboration and the fintechs can work together. Dave, first, your business, you described as a fintech firm, of course, you use data in some of the ways that I was talking about. What do you see as the real opportunities here?
I think it's a huge opportunity, because what's essentially been a bit of a legal grey area is suddenly becoming legal, and there's a regulated industry around accessing account information. So there's a lot of people, especially our experience here in the UK, who are understandably very dubious or scared about, handing over their banking credentials. And actually, the regime under PSD2 and Open Banking is going to provide opportunities where actually there'll be other ways of connecting your bank account to a fintech without having to type in your internet banking password. So it kind of legitimizes and kind of opens up, I think, access to far more consumers, but also much better quality data. The fact that there's going to be payment APIs. So I think that the worry is that fintechs, some fintechs have ambitions to become virtual banks, and some of the traditional banks, the danger is they could essentially become these dumb pipes who are kind of have the cost of doing KYC, the cost of servicing kind of the actual moving of money, but the interface and the customer interaction is all done on the fintech end. And where there's partnerships, I think that can work well, but I think there is a kind of a lot of disruption about to happen.
Yeah, it's interesting to talk about legal grey area and coming out of the legal grey area. So I guess that has changed. I mean, you said that changes the way in which you represent your business to the market.
I think it does. I mean, I would say there's a big discussion around screen scraping. I mean, my view is that banks have been entirely complicit in the rise of screen scraping by not providing kind of other means for consumers who want to access their data and use it with third parties to be able to get that data. And it's a pity that it's required legislation to kind of force this technological change. But I think it does make things very different. But I would say we are heading towards a cliff edge. We're talking about not wanting a Brexit cliff edge. But January 2018 is a cliff edge. At the moment, there is no kind of common, agreed understanding of what an account information service provider is across Europe. There's different interpretations. There's not a clear understanding of professional indemnity insurance that's required to register. And there's a liability shift that happens on the 13th of January where banks can no longer turn around to their customers if something goes wrong and say, oh, it's your fault. Actually, if the customer's been using a registered AISP or PISP, then there's a liability shift that's taking place.
Yeah. So, as I said at the beginning, 6 months into the day this week, things that take place. So Dave, you mentioned liability. So, I guess it opens up the key legal questions. What do you really see as the challenges here in terms of liability?
Yeah, well, Dave has touched on some of them, and I guess the key thing is that this is important not because of law or legal stuff, but because of trust. And if liability issues aren't clearly sorted out, that will threaten the whole ethos behind open banking, because we need customers, consumers and businesses to embrace it, and if the liability position isn't clear, that will threaten that. So it matters not to keep looking at a job, but to make this whole agenda work. And there's different aspects to liability, and Dave's touched on one in particular, which is around liability for unauthorised payments. And so, when the new regime comes into play, if a customer has a problem with a payment, if they believe it has been unauthorised, then they go to their bank, they get their money back, and the bank will then turn around to the third party and seek redress for that. So that's one liability regime that needs to be sorted out. And there cannot be a contract between the bank and the third party in relation to the sharing of data through APIs. So that redress mechanism needs to be handled through the open banking regime. The other aspect of liability that's quite interesting, though, is outside of the whole payment space, is in relation to the AISPs and issues that could arise for customers, such as losing their data, or data breaches or unauthorised use of data. And in that circumstance, they don't go to their bank, they go to the third party. But what I'm interested in is whether or not that's what will happen in practice. The bank is the recognised brand that people know. This involves their data being compromised. They associate it with the bank, rightly or wrongly. Question, will they still look to the bank for some kind of redress? And then the question becomes one, not so much legal, but customer relationship-wise, reputationally. Does the bank decide that it will step in and help them, but then that's probably on an ex gratia basis. So then where does that leave them in terms of getting compensation back? So there's some quite interesting nitty-gritty issues there. And then thirdly, I suppose, just liability as between banks and third parties. This is about a pipe of data. In what circumstances can that tap of data that be turned off? And what if the bank believes it can turn that off, turns out to be wrong, but that causes a loss for the third party? So there's some quite interesting issues there. There are some concerns around, from a liability point of view, just from banks in particular, about whether the third parties are adequately capitalised to meet some of these risks and losses that they might face. And there's chat about perhaps having alternative mechanisms, like voluntary funds, a bit like the kind of apt travel type arrangement. So that's bubbling around at the moment for discussion. And Dave touched on insurance, and EBA just published some guidelines on insurance just last Friday, and all about how to calculate and identify what the risk is. And that's all good, and perhaps those that have been in the market, the screen scraping market, will have more history to help underwriters calculate risk than perhaps someone who's new to this game. But I think there's a bigger point, which is on insurance, which is, first of all, is PI insurance, which is what is being proposed, is that actually the right insurance? Or is it only part of the answer? Because it doesn't necessarily cover cyber risk, and cyber risk is going to be one of the big things that people will be concerned about with the ISPs getting their data stolen. And secondly, is there a market for this? Because our understanding, certainly from work that we've been doing with data and otherwise, is that the insurers are being very slow to come to this party. It's interesting, it's a new market for them, but pricing risk and trying to work out how to underwrite this is proving to be a challenge. So that could create a bit of a gap.
Yeah, it's interesting. It's almost a hidden part of this agenda that insurers need to innovate. But are they ready to innovate to service this new market that's there, that regulations down in place needs to be there by January 2018? Do you have any thoughts on what I'm saying around the customer and liability and the redress mechanisms?
Yeah, I think we obviously have mechanisms in place already around misdirected payments, and I think all of that processes can be leveraged. So I think there's no real concern about that. This question about customer information is a headache for everybody. There's no question about it. And we don't know what the answer is yet. However, it's one of those things that just needs to be figured out. The issue today is that you've only got one institution you're dealing with, it's the bank. And if the bank was to lose information or somehow that was shared inappropriately, then you know where to go to get it sorted. But in the future world where you have tens, maybe hundreds of third parties that have legitimate access to customer data, then it's a completely different kind of situation. Also, if you look at it from the tech point of view, all of those third-party companies, TPPs, will have different approaches to security. So suddenly the attack surface for the nefarious hackers, which are going to continue to increase, right? They've got lots of ports of entry. And so what will happen? Some customers' data will be copied and shared with newspapers and so on and so forth. That will happen. So the long and short of it is that this is one of the problems that needs addressed, that will get addressed by the industry, by the lawyers, by the banks, by the third parties, because there is a will in the industry to sort this. So it needs to be talked about, it needs to be sorted, but it shouldn't, don't look at it as something that poisons the well here. It will not stop the progress here that's happening.
Yeah, so it's interesting. So there's in a sense, a lot of work to be done.
Yeah.
And we do have these hard regulatory deadlines for next year. So what do you think, Alan, about how can this practically be achieved in this short time? So how do you achieve?
And so that's a good question, very direct question. So the answer is the dates for January 2018 are challenging. But according to the current project plans that we have internally, I can only comment on those, is we believe they're achievable. In terms of what will help is very clear regulatory guidance on things. We're still waiting, for example, for the Treasury's consultation with PSD2. It's not expected until the end of July. And then the FCA's consultation is not due on PSD2 until the end of October. Now, large banks have something called change freezes. And so basically what that means is you halt all change for a period, a busy commercial period like over Christmas. So that will come in end of November. So the net of that is that it's a very short window if what comes out from the FCA is different from what we expect, then that creates a bit of a challenge.
Yeah.
So to be fair. So those are the things that we really need to get clarity.
And so it's your perspective on timelines as well, because there'll be this period where businesses like yours may need to apply for registration and for payment initiators, they need to be authorised, in fact. We're saying that period might begin 3 months, 4 months before the deadline, so October this year. And Alan's just mentioned that there should be more regulatory guidance in October. It makes things very difficult.
Yeah, it's very difficult. So, October we need to put in our application. The FCA have 3 months to turn it around, and they're literally opening their timeline up 3 months before PSD2 goes live. So I think there's a real situation where you'll have firms kind of wondering, what do we do on the 13th of January if we've not got it through? Do we, because technically, what has been an unregulated activity is becoming regulated. And if you're not, registered or authorised, then you'll be in breach of the law. And so it is very tricky. I mean, I think technically wise, here in the UK, there is the thing with PSD2 that, yes, the kind of law comes into effect in January, but the regulatory technical standards, are still an unknown date as to when they will apply. But here in the UK with open banking, we are expecting, the top 9 banks, it's challenging to go live with APIs in January. But, will any fintechs have the regulatory permission to use them, even if they're technically ready to use them, is a big question.
Yeah. So now we talked about liability, we touched on data security. So maybe just dive on that in a little more detail. So do you think that there's unique data security and authentication challenges that are rising out of open banking?
Yeah, and it's interesting, the debate happening across Europe. It's kind of opened my eyes really to, often I think people view banks as, these big incumbent, slow-moving, protecting their interests. I think any company that's built up some market share and been around for a few years actually can exhibit the same behaviour. And so we're seeing from fintechs across Europe who've already established a bit of market share, very actively lobbying to protect their specific business model, regardless of whether it's in the best interest for the consumers or the market, in the long term. So, there's a lot of arguments around technical standards, about the transmitting of credentials. Is it okay? That's the main problem with screen scraping at the moment, is that consumers pass over their banking credentials to a third party. So here in the UK with Open Banking API, that will no longer be the case. Customers will be redirected to the bank's website or app, and they'll authorise kind of access or authorise payment in the bank's kind of interface. But there's players in Europe who are saying that's unacceptable. So there's a lot of kind of controversy around at the moment. Here in the UK, I'm really pleased that Open Banking is working with OpenID Foundation using recognised international technical standards, which have kind of been tried and tested, used at scale by the likes of Google and Microsoft. And actually, that's the kind of standards which UK open bankings are being built on from a security perspective.
Yeah. I guess security is one thing. The other thing is really consent, trust in the customer, and the risk in those aspects. So what are your thoughts around TPPs gaining explicit consent and making sure that the customer really understands what's taking place in this new technical regime that they've described?
Yeah, I think the interesting thing about consent and data is that this is when you start to bring in other new legislative developments and start to put them up against things like PSD2 and open banking and start to identify and recommend the issues. And the key one is GDPR, the General Data Protection Regulation, which is due to come in next year as well. Now, given that it's all about data, and given that a lot of this is all about data, then clearly you put them together. And when you sort of underpin what some of the philosophy behind this, if we think about what open banking is doing, it's all about sharing of data, it's all about using data. Then you look at what GDPR is doing, and a lot of that is about protection of data and consent and being very clear. You can see that there's the potential for some frictions to develop there, and we are ironing those out and identifying those. And because this is moving, this whole agenda is moving at such an incredibly fast pace. Starting to find some of these things out in real time. As Alan says, I'm sure we'll get there, but there are things to iron out. And consent is definitely one of one of those, because PSD2 talks about explicit consent in terms of sharing your data, but that's not really a term that's particularly defined in GDPR. GDPR is all about consent being freely given, being unambiguous. It's all about clarity. And I guess that will place an onus on the third party who is gathering personal data to make sure that their communication channel with the customer ticks all those boxes, gets really clear to the customer. The customer understands for what purpose their data is being used, has the opportunity to opt for different options. So, for example, I would only like to share this element of my data, or I'd only like to share this bank account, and I'd like to share it for a one-time only, or I'd like to share it for a month. And all of that needs to be set out and clear to me, so that I can properly consent. So, and the other angle on this as well is that if you're looking at policing consent, there's been some debate about whether the banks should be policing consent, and when a third party comes to them and says, I've got consent from everyone, please share this data, should they be verifying that? And the consensus is landing on they have to do the authorization, that they have to check that it is me, and that it's not somebody impersonating me, but the consent should be done by the third parties, because they're authorized, approved in their own right. And also because there would potentially be competition risks if the banks start to dig into what third party, what do you want this data for, because that's might be forcing them to reveal their business model. But I think overall, when you're looking at consent, the key things are there's going to be a much longer chain of people accessing data now, and so clarity for the customer about where my data is going, who's going to be using it, how far down the chain it goes, is going to be really important as well.
Yeah, thanks. There's lots around sharing, David. And I guess we're moving from a stage of having these business models, as we mentioned before, that's screen scrape, towards an open API regime. So we've seen some debate between the European Commission and the European Banking Authority as to whether screen scraping will continue once these regulatory deadlines come into place. Do you have thoughts about the future of screen scraping?
Sure. I like to say that screen scraping is against my religion. And anyone who has any, people talk about people having mechanical sympathy, if they're driving a car, I really understand that expression. And it's a bit like that if somebody on the technical side understands what's going on with screen scraping. You kind of, want to tear your hair out and say, this can't be the way it is, right? But the point Dave made very well earlier was that although the mechanism is far, far from perfect, and people are sharing the credentials with a third party, which is not a wise thing to do, or even strictly illegal thing to do in the past, people still did it because it made it easy. Now, finally, the banking industry, everybody from the regulators and the CMA9 banks, they're all getting their act together, and we're going to put in a mechanism that is going to mean that you won't need to screen scrape. Technically. Great. It's going to give us performance, it's going to give us control, it means that credentials will not be shared. For all of those benefits, we would say, absolutely, the future has to be using open APIs. That's really clear. However, we've got this, what's sometimes the period, the fuzzy period between January and when the RTS, the regulatory technical specifications, come into force sometime in 2019, and the European authorities have already said that in that period, that screen scraping is okay. So therefore, the banks need to support that in that interim period. So I mentioned that. But there's another thing. And that is that the whole point of having a portal, whether it's on a website or via some kind of PFM-style app on your mobile device, the whole point of it, it's raison d'etre, is to get a single view of all your financial positions. And there are financial products like mortgages, like investments, that are not within the scope of open banking or PSD2. And so to get that data, you would have to screen scrape. So again, I said it's an imperfect world. you are going to be able to use open APIs for normal style accounts, but for those things, it's going to be this. There's always going to be a period, and then you can see that in the fullness of time, there wouldn't be a financial product on the market that didn't also have an API. It's just we're all dealing with legacy. Banks deal with huge amounts of legacy, but everyone's dealing with legacy here. It's not the way we did things in the past. How did we do it? In the past, we provided websites if customer had access. And before that, you didn't even get direct access. You had to phone your bank, and somebody at the bank had a green screen, and they talk to your data directly. So it's a transitionary period. I think in the fullness of time, it absolutely will go away. And I think the point one is that GDPR insists that it has to go away. Because just think for a second, a millisecond even, what's happening here as you're giving away your credentials to a third party, they have complete access to all of your data. There's no granularity or control or anything. It's just, here you go. Okay? And that cannot persist into the future. So it'll take time, but it will happen and it will be forced now.
I suppose one of the things that you and I have talked about, though, in relation to the fuzzy period that's interesting is, if people who are screen scraping or registering at the end of the year and then able to continue doing what they're doing up until the point where the regulatory technical standards come in, it's just an interesting angle on who's responsible for kind of policing that at the point the RTS come into play. If they're on the list legitimately from the end of this year or early next, it'll be an interesting. I don't quite understand yet how the process would work to then who's going to take them off the list or update that list or flush through it and say, well, hang on a minute, you can't be on it anymore because you're actually just screen scraping rather than using APIs. So it'll be an interesting one to see how that's going to pan out. I'm sure there will be a solution, but it's not clear right now, which goes to that fuzzy period.
Yeah, it comes into place. So I guess, Dave, on this discussion, probably our final question that will apply to the audience at the time. So I guess there are some technical solutions that may make it possible, and I'm particularly thinking about European TPPs, third-party providers who have a different view than we do in the UK around open banking. So what are your thoughts on what Aaron and Lauren just said?
Yeah, so one of the things that's required in regulatory technical standards is identification for the third parties, and actually there is ways that kind of screen scrapers can identify themselves to banks, and so there's been a whole kind of argument about that, and so there's proposals going around that that's enough. I mean, my personal view is that while a third party may be able to securely identify themselves using certificate-based solutions and eIDAS certificates, I don't think strong customer authentication or I think many forms of strong customer authentication cannot take place via screen scraping, via credential sharing. So I think there's still arguments going there. I suppose the main issue is the incentives, and so that's I hold quite a lot of sympathy for kind of views from Europe is that there needs to be incentives for banks to produce the best possible APIs, and so that's some of the discussion around keep screen scraping as a fallback option because it will then hopefully force banks to kind of do the best API product that they can do, considering that they haven't developed these APIs. Even though there's been a customer need for them, it's taken legislation to force them to do that. So I think that's some of the worries. But like you're saying, here in the UK we're going to be an open banking directory, and when we apply and get our FCA registration, we're going to go and get a lot of different certificates from that. So there's a whole kind of ecosystem of trust which will develop here.
Yeah, thanks. So we had quite a technical discussion. Alan, what do you think in 5 years' time, where will we be with open banking?
I think in 5 years' time, open banking will be the way to go. There's no question about it. The more interesting question is, what do you mean by that? Does that mean that people will be using a third-party app to access their bank? I think in a lot of cases the answer will be yes, particularly for the younger people, millennials. They will jump to another app with alacrity, but there's no impunity, you're not choosing your bank account. Why not? Let's try it. My friends say this is good, or Twitter says this is good. This is the thing that's hot on Facebook. Let's try that, right? So that will happen. I think there's a large segment of customers who just will stick to their bank, whatever. They'll feel nervous about technology generally, and they'll stay with whatever their bank is providing. But I'll say another thing, and that is this. Banks themselves as these APIs become available, they will start using these APIs themselves. The people in the tech industry call this eating dog food. It's expression. And so they'll use these APIs themselves with their own apps. So there will be no difference other than there'll be one experience from the bank's app, there will be other experiences from third-party apps, some competing with the bank's app. But you'll also see lots of third parties that are targeting niches that the bank's not interested in and not focused in. Like, so for example, children's products requires a different kind of gamified type of thing. Students, more elderly people. All of these segments require a different kind of interface that's more geared to them than the one-size-fits-all thing that banks generally would do. It's not that the bank isn't interested in all these different niches, it's just they can't possibly afford the costs and development and maintenance of 5 or 6 channel applications. But the market can. So that's where I think that collaboration, as opposed to competition with fintechs, between fintechs and banks, is where, that's where the real action is going to be.
I was just going to say that I completely agree with that in terms of that collaboration agenda and getting, as Alan said right at the beginning, getting away from that competition through to collaboration, making a bigger thing. And I suppose the interesting element of this is that, you know, all the regulation gives a kind of minimum requirement in terms of API access. I guess the interesting bit is what banks strategically do in relation to another level, another layer. You know, is there a kind of A-list group that gets the legal minimum, but then some more in order to build products exactly along the lines that Alan's suggesting? And I think that will be really interesting to see once we get past the initial bedding in of this, strategic choices that some of the banks make in terms of collaboration and what that means in terms of level of access they give to their collaborators.
Yeah, thanks. Dave, thoughts?
Yeah, no, I agree. I do think it's going to change a lot of things, and yeah, it's just be interesting where things end up. I mean, I think advancement is really key. You know, my hope is that we won't require regulation to force mortgages, investments, and loans to also be provided by APIs. But banks will start viewing APIs as another channel to market, another way, you know, to make money as well. You know, the ones which don't have to be legally required, they could charge for those ones. So that's my hope. We move into the, you know, really an API-driven world, which will result in much better experiences and outcomes for customers.
Yes, great. Thanks. So maybe time for one, two, one, we're over time. Questions from the audience? Anything you'd like to ask our panel on all those issues we discussed? And just one here at the front with a microphone. You get a microphone. Tell us where you're from.
So I'm Ryan for CNBC, journalist. My question is made to Alan. A lot of fintech experts have warned that banks are kind of very slow to kind of cope with incoming PSD2 regulations. What would you say to that? What would you say that RBS and NatWest do in regards to this?
I think the observation is correct and astute. Right? And we're no different from any of the other banks. Right? This has come at us, all large companies, including banks, and especially banks because they're regulated, move slowly, right? Because we have processes and we have teams that make sure we follow those processes. And, you know, this young person with this bright idea, well, forget that. Right? So big banks generally are not free to foot. They're not. Okay? And this change has been forced upon them by the regulator, as has been pointed out. But it's what you would expect. And it's not atypical. However, this change to open banking is fundamentally the biggest change that's ever hit banking since the invention of the checkbook. And it is, you know, it's like, I like to use that expression, you know, you will be assimilated by it. We're moving into a open API ecosystem, and there is no choice. So all of the large organizations will come, kicking and screaming in some cases. What we are doing as best as we can within our own institution is seeking to accelerate the change, to be, you know, an enzyme to force the reaction so that we really get there and we take advantage of the opportunities that are going to come, because there are opportunities that are going to come, because we don't want to end up as the dumb pike that Dave referred to, right? Because that is absolutely a real and present danger. We want to be adding value. We don't want to be disintermediated, but we will be disintermediated from some of our customers for sure. That's guaranteed. So we'll win some, lose some. So that's a kind of balanced answer, but I'm trying to be absolutely candid with you in terms of the reality here.
If we just thank our panels, then we'll pass back to Alice.
Thank you very much to Luke and his panel. It's very interesting to hear about the challenging timelines in that particular environment, and I'm sure we'll continue to look on